Basics of technical trading. If you're a fresh trader, you have to watch this video. Please do not trade without knowing basics of technicals. So you need to watch this video for the next 30 minutes. I'll be discussing in detail and keep watching. Good morning, Namaskar. I'm Divakar. Welcome to Bulls and Bear Bulletin. Let me quickly go through the topics which I'm going to discuss today. I'll begin with Nifty and Bank Nifty technicals, which are very important to know before you take a trade. In fact, that is also the primary topic for today. And I'll also be talking on the global market scenario, how it can impact the Indian market today, and the indicators which I use most of the time, moving average, and how it works, and the details on that. And then option chain, where you get to know the support and the resistance level of your stock or index. Well, friends, along with this, I'll continue discussing on two of my favorite option strategies, bull spread and iron condor. So I request you to subscribe to my channel on this context if you're not it, and like my channel too. So let's go first on the Nifty technicals. On the Nifty technicals, if you see on the last week of September, the Nifty made a high of 26,200 300 level, and from there it started declining. Initially, it took support around 23,300 level, and you can see the bounce back from this green candle, which gave us the impression that the market correction is over and it may be resuming its bull run once again. But however, we were wrong when it took resistance around 24,800 level and started declining once again. And this time it started making newer lows, and the new low for the season was 21,900 level, which was on 4th of March. By this time, if you see here, the RSI indicator was at its lowest, and also the MACD. Well, this gave us a kind of impression that the market is on extreme oversold scenario, and it should bounce back from here. And that's what exactly happened, and the market started uh, going up. But however, it took resistance around 23,800 level, and started declining once again. And this time, addition to this, the global scenario on the market tariff subject pushed the market down aggressively and made an attempt to break the new low once again. And it was around just a couple of hundred points from the previous low, which was on 4th of March. And you can see from here the market aggressively bounced back. In fact, comfortably it broke the resistance of 23,800 level this time, and went on making new highs. And finally, it crossed the 25,000 mark. So we are seeing for the last couple of trading sessions, the market is gaining strength day on day, and even crossed the 25,500. So it all looks like the market is going to be very near to the all-time high once again. Whether it's going to cross that and go further and make a new rally, or will it take some more time to break, is what we have to wait and watch. And friends, that's about the Nifty technicals. Let's go to the next topic. The next topic is the global market scenario, where we can look at about 3 or 4 international markets to get to know how things are there. And on the US, the S&P 500, if you look at, is up by 0.5%, and the Nasdaq, the tech index, is up by 0.39%. And if you go towards the UK market, the FTSE 100 index Before the data comes, let me also tell you, I just picked up randomly a couple of international markets. Of course, US is definitely a must because that has the highest influence for the global market as well as the Indian market. And the UK market, FTSE 100, you can see here is up by 0.72%. And if you go to Asian market, looking at Japan, the Japan 225 index is up impressively by 1.46%. Last 1 week, the market Japan is doing really well, and it's trying to go up aggressively. And if you look at the Chinese market, well, if you come to China, uh, SSC composite index is also up by 0.2%. So overall, the market sentiment is positive from the global market per se. So you can presume, okay, it's not going to be that negative on the Indian market too. Now let's go to the next topic, the moving average indicator, where how this can be an important indicator before you take a trade. Well, what is a moving average? A moving average is nothing but for a particular period, say 10 days. You know, you if you study the closing price of a particular stock for 10 days and take the average, that becomes the moving average of that stock. Similarly, uh, there are different moving averages, say 10-day, 20-day, 50-day, 100 and 200-day. All these are represented by different colored lines here. You can see on this chart. Amongst this, the most important one being the 200-day moving average indicator. And it is considered that if a stock is trading below this 200-day moving average, it is considered as weak or bearish. At the same time, if the stock is trading above this line, it is considered as strong or bullish. So it's pretty simple. And if you see a candle crossing this line, that is from upwards to downwards, that is the time you should sell it or take a new sell entry. And if you are seeing a stock or index crossing from